Are you one of the small business owners that has still not received your Paycheck Protection Program funds? Or maybe you've already received them and are wondering, what do I need to do to make sure I'm not having to pay this back at the end of the 8-week period? We're going to strive to share with you some ideas, and that's coming up right now. What's up, everybody? I'm Bill Wilkins, CEO and Certified Financial Planner Practitioner of Wilkins Wealth Management Group, and welcome to the Pursuing Your Financial Freedom podcast, where we're striving to bring you ideas and inspirational stories, all in order to help you pursue and preserve your vision of financial freedom. And as I mentioned on today's podcast, we're going to talk about some small business ideas with this new Paycheck Protection Program that will strive to help you not have to pay this back at the end. So there's some key provisions that we got to talk about. And if this is the first time that you've ever joined our podcast and you want to get more ideas and inspirational stories, you can follow us at Twitter at Life Changing Ideas. You can also follow us on Facebook at Pursuing Your Financial Freedom. And then also we're having a YouTube page that will be coming at Pursuing Your Financial Freedom, and finally LinkedIn at Pursue Financial Freedom. This is our beautiful backdrop here with the Cincinnati skyline. If you've never been to Cincinnati, it's got to be one of the best views in the country when you come in from our northern Kentucky neighbors down the big hill of I-75. Looking there at night. So it's an absolutely gorgeous shot. Kind of reminds you of a mini San Francisco. But we are in northern Cincinnati area, in Mason. But again, if you like to follow us, you can check us out on that. But let's get to what we came here to talk about, and that's the new Paycheck Protection Program that's offered to small businesses with employees under 500 in their program. And there's really two key things that you have to look at in order to make sure that you're striving to get that loan forgiven at the end of 8 weeks. And I'm going to talk about these two key ideas. But first of all, a disclaimer. I'm not a CPA, and I'm not an attorney. So this is data that I'm gathering from not only our broker-dealer, LPL Financial, who's got some information that they've been doing research on, but also just following other CPAs and attorneys out there that I'm hearing this from. But it is a disclaimer. Make sure you do your own due diligence and double check everything with your CPAs, your attorneys, and your financial people to make sure that you're on the right track. But I'm going to share with you today some things that I've learned that I think are very important that you should know as a small business owner. So I'm going to go to my big board here so you can take a look at this. And there's a couple things right off the board. Really is the payroll expense, and then the number of employees that you have to hire back within 8 weeks from the time you actually receive your funds in the bank. So it's not when you sign the loan. It's not when you're all that kind of, it's just when the money hits your bank. And along with that, if you're in a situation, which I think there are a lot of employers are, where there's a lot of their employees maybe don't want to come back. They're still concerned about health situations or whatever, and you can't get them to come back. So you have to be mindful that you have to try and you actually not try, but you have to, based on what I'm hearing, get back the same number of full-time equivalent employees that you had prior to the COVID-19. And there's two periods that you can actually look at for your employees. So the first one is from January 1 of this year to the end of February. You got to look at your full-time equivalent employees, and the numbers that I'm hearing are a full-time equivalent employee is equal to somebody working 30 hours a week. Now there's different definitions of that out there. So again, I encourage you to talk to your CPA and your attorney, speak to the SBA and all that to find out for sure but you have to bring that amount back, that type of equivalent employee. Now, I also have heard that 2 part-time employees equal 1 full-time employee. So if you've got 10 employees that you had prior to this situation, and you look back at 2, and let me back up a second here. The 2 periods, again, you can look at January 1 to the end of February of this year, or you can go back to the middle of February last year, 2019, so February 15th through the end of June last year. Those are 2 periods in which everyone has the lowest number of full-time equivalent employees. You can choose that one, from what I've heard. So check on that, because what can happen is if you had 10 employees, you only bring back 5. Let's say your payroll or your Paycheck Protection Program funds amounted to $100,000. So you got $100,000 total that you can spend on payroll. And there's some other things. I'll talk about that in a second. But if you didn't just meet this one full-time equivalent employee requirement, and you only brought back 5 people, then that could be a 50% of non-forgivable loan at the end of all this. So $100,000, only brought back 5 full-time equivalent employees, and you had 10 before one of those 2 periods, then that's 50% that is not forgivable. So you want to talk about getting that money either back to the SBA, the government, or you're going to be looking at a loan, which my understanding is that loan is only a 1% interest rate, but it's over 2 years that you have to pay it back. Now, I've also heard terms of 4% over 10 years, but again, make sure you're double checking with your financial professionals on that. Another key point is if you don't think you're going to need the money, there's circumstances that can come up with that, then you have, my understanding is until May 14th to give this money back. So that's going to be interesting. You got maybe some businesses getting money earlier than others, and all of a sudden, it's May 14th, and maybe you got your money 2 days ago, and you only have 2 days to get it back if you don't need it. So no questions asked is my understanding, no penalties, no fees or anything like that, no interest. So check on that. The other key provision of all this is you have to spend of your total funds. So you get $100,000 that you've been granted, or the loan amount originally. You have to spend at least 75% of that on payroll. So that is a key thing to be able to get those funds forgiven. And just a couple of the allowable cost, or let's call the definitions of payroll. And I got this up here on my big board. I'm going to scroll up here. So it's up here on the top. Compensation, obviously, salary, wage, commission, similar compensation, or payment of cash, tip, or equivalent. You've got a payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group health care benefits, including insurance premiums. So don't forget that. That's part of it. I believe that's usually line 14 on a W-2, but again, double check with your CPA on that, CPA and attorneys. Then also payment of any retirement benefits. So if you're funding a 401k for your employees and have been doing that, that can count towards part of this payroll 75% that you're doing. So that's a great thing to look at, which should have been, if you're working with your professionals ahead of time, they should have been aware of that and factor that in your total loan proceeds. Then also payment of state and local tax assessed on the compensation of employees is also included. So that's getting in there. Not eligible, any compensation over $100,000. So if you were making over 100, if you're self-employed making over 100,000, you can only capture up to 100,000. And there's 2 different things you got to look at. One is if you're like an S corp and you're taking a W-2, you're paying yourself a salary. Those are reported on your 941s that would have been used to calculate your loan. If you're self-employed, filing Schedule C, It's your net profit, which I believe is line 31. Again, I'm not a CPA. Double check with them on your tax return. So double check that. Also, taxes imposed or withheld under chapters 21, 22. I'm scrolling up here. 24, the IRS code. Also, compensation of employees whose principal place of residence is outside the United States, not qualified for that. Qualified sick and family leave for which a credit is allowed under Section 7001, 7003 of the Families First Corona Response Act. All those are not qualified. So what are allowable uses of the loan proceeds? As I mentioned before, the payroll costs. We just talked about that. We talked about group health care benefits during periods of paid sick, medical, or family leave and insurance premiums. We talked about the salaries, commissions. Also, payment of interest, not principal, but interest on any mortgages, obligations, which do not include any prepayment of principal or mortgage obligation, which I just said. Repeating myself there. And also rent, and utilities. So if you're renting out a place where your place of business is, that is an allowable use of the proceeds. Also utilities, and this includes your cell phone. I do have my cell phone right here. So your cell phone is part of that, and then also your internet connection if it's associated with the business. But again, double check with your CPA and your attorneys on this to make sure. Provisions of the loan rates. Again, this is where I've seen two different things. I've seen 10 years for any amounts that are not forgiven, but I've also seen 2 years at 1%. So double check that and look at your loan documents when you're signing for that. Let's see here. And the other key thing about the PPP loan is that you're not going directly to the SBA, which you've found out, or if you haven't applied for one yet, you'll find out if the loan or the funds are still available out there, is that you're actually going to your bank. And seems it's been a little bit more successful with smaller banks, regional banks, in getting the PPP, the loan proceeds. But you've got to go back to them directly and show provisions that you've been meeting these guidelines. So again, 941s. I've heard that you really want to take from the time you get your money in the bank, you want to kind of look at doing that every 2 weeks, pay yourself. But again, consult your CPA on how to do it, because you're going to have documentation down to the dime where this money has went and how it's being used to make sure you get the best chance of forgiveness at the end of this. Can you get more than one PPP loan? That is, you can't. Now, I've also heard that if it's under a separate tax ID, so if you got two businesses, that is potentially possible. So you need to check on that. And then how does the PPP loan coordinate with the SBA's existing loans? So a lot of people also filed for the EIDL, which is the Economic Injury Disaster Loan, which gave you per employee $1,000 right up front grant, forgivable grant up to $10,000, which allowed you just to spend that money on anything. But that forgivable grant, my understanding, what that does is if you get a $20,000 PPP loan and you get a $1,000 grant, that $1,000 grant knocks off $1,000 off of that PPP loan. Now, there's Part B of the Economic Injury Disaster Loan, which is actually a loan, which the numbers that I've seen are 30 years at 3.75%. You can spend that, what I'm told, on anything. But that does not, as my understanding, affect the PPP loan as far as what's forgivable. It's just that grant portion. So you want to, again, as I'm not a CPA, not an attorney, I'm just giving you information that I've seen that you need to double check with your financial professionals on that. Let's see if I scroll down here. Talk about release as someone who has received a PPP loan, the loan application. So this would be, maybe you don't want people to know that you're getting this loan, but I think a lot of people are going to be pretty understandable for any small business. You got big name people out there that are needing, some transition money as we get through this. But there is that potential that can be disclosed on that under the Freedom of Information Act request to be out there. I think that's pretty much on that I wanted to go over in that. So a couple other, let me just look through my notes. I'm going to take you back to my big board here. Actually, let's bring you out to my the troll shot. If you saw our first podcast, this is the lucky troll, Wall Street troll, and I got my family down here as well. You can take a look at that, but I'm just looking through some notes as I get out of here or get off of this one screen. So bear with me just a second. I just want to double check my other notes I wanted to share. If this will come up. And did this just knock me off? Well, I think that's pretty much it. The main things. I'm going to come back with another podcast on some other specific things of the CARES Act here in a bit. But those are the main points that I wanted to bring out to you guys. Lastly, if you have not seen our first podcast and you want a shot at winning a $100 gift card backed by Wilkins Wealth Management Group stimulus plan, you have until Friday night at 12 a.m. to both like and share this video or our first video. And then also put in what you think the Dow Jones Industrial Average is going to close at by June 20th of this year, which is the first day of summer. So if you can get that in, those three things, you got a shot to win a $100 gift card. Not only on this Saturday, we're going to announce the first one. And then if you didn't win the first one, you have a shot for that Guess the Dow one that we're going to announce on June 21st. So with that, I really appreciate you joining the podcast. Thank you for taking time to listen. And I wish you a fantastic and spectacular weekend coming up. And thank you very much.
Too many days in the darkness without a glimpse of the light. Running tired and broken and scared, but I swear I'll never give up the fight. I see you broken and beat, head pulled down over your eyes. Every part of you wants to surrender, but darling, you were meant to survive. With it, your heart, spend this time in your head. With it.